invested.
Mm-hmm.
And social impact investors, they want, most of the time, they also want to profit. They just want to profit and impact. So yeah, it's definitely it's a for-profit game first and foremost.
Mm-hmm. Thanks, Ben. What is the trend that investors are funding the ventures in Africa remotely? Any best practices on the success so far?
I don't think investors are funding businesses remotely.
Mm-hmm.
Not often. Most of the investors are actively traveling across the continent to all of the different places where they are trying to, support or engage entrepreneurs. If an investor is supporting a company from a distance, like for example, myself, I've invested in companies in Egypt, Uganda, Cameroon, Ghana, Nigeria, Kenya. In all of those instances, I'm investing with local partners.
Mm-hmm.
So somebody is active in the market and is working with the entrepreneurs, and then I am co-investing with them. But yeah, I mean, investors usually like to be in a situation where if there's a fire, your team is gonna get to the location within sort of 15, 20 minutes. So also, like for example, if you're building a hub in Somalia, you would want to find investors in Somalia to put money into the company. And then those investors will have connections to, people living in the UK or people from Nigeria, people from South Africa who would, want to join them in those investments. So I think that's your path to connecting with capital from outside the country.
Mm-hmm. Thanks, Ben. And we have also a question from a donor. Anything specific you would expect from donors, from donor organizations?
There are many things. Can we make that question more specific? I think there's one, hubs need financial support. So if donors or NGOs, multilateral institutions can provide resources, this is critical. It's not necessarily that hubs are great money makers. They do a lot of work that's good for society. They try to find ways to generate an income, a diversified income, if they can. But in Israel, in the Netherlands, our hubs still get lots of support from government and from the private and public sector partners. And so there's every reason why donors should be financing hubs across the continent. And then also research and development cost money.
Mm-hmm.
So universities, corporates, NGOs that can provide monies that help entrepreneurs with research and development, prototyping, testing. This is all extremely valuable.
Excellent. Thanks, Ben. We have a question also from Ethiopia. SMEs in Ethiopia most of the time face challenges of bank and debt financing because of collateral. So is there any experiences for solving these type of problems?
Yeah, stop wasting your time talking to banks. I think that's just also one of those tough realities. These institutions are not going to change. Mm-hmm. They are not flexible. They will not adjust, and they have no reason to. So that means we have to think of alternatives. We have to find different ways.
And any idea of potential alternatives, Ben?
For traditional SMEs, I mean, you can look into like royalty-based financing schemes, mm-hmm. or you can try and think about basically getting liquidity maybe through customers. So also how the company is structuring their contracts, whether or not there are ways to talk to suppliers or to customers to work through constructions that make liquidity available for the business. So if you're able to structure a relationship with a 2-year perspective, then there are lots of things you can do with the design of the contract that can help the company, basically be able to make investments that they need to make or to be able to cover expenses. So yeah, I think it's just looking at each situation and trying to think creatively about how to address it.
Okay, and moving to the incubators point of view, investors are interested in funding in startups. Is there any way the hubs, the incubators, the business support organizations can get any support?
For support for what?
Support funding for developing their activities, for implementing new activities and being sustainable.
I think hubs, so part of what we talked about was the USP, right? How are you profiling yourself within the market? What you want to do is you want to build something that's distinct. So for example, if you focus on agriculture and you become the expert on innovation in agriculture in your country, then you're going to be able to build programs with that profile that are agriculture focused. And in how you design those programs, you can build in different components where, providing finance for the businesses or linking to investors can be part of that, or providing technical assistance, etc. And yeah, you can most certainly get paid for that.
Thanks. And we have a question also with regard to how to get funding for young entrepreneurs, in this case in Angola, how to raise fund for small entrepreneurs. I think we have covered this during the presentation.
Yeah, I would recommend trying to engage people from the private sector as part of a pool of mentors that are willing to work with your entrepreneurs. And from those pool of mentors, some of them could be getting involved as investors, as those first investors, and that can be a way to help basically address that need. I would also mention VC4A manages something called the Startup Academy. There's several hundred hours of materials and content available in multiple languages, basically addressing the full spectrum of startup entrepreneurship, all of the challenges that an entrepreneur or a founder will have to overcome has been documented in different modules. And all of those materials are available online free of charge. And many hubs incorporate some of those materials in their trainings and in the sessions that they are offering entrepreneurs. So also applying, ideas around blended learning. But just, there are a lot of resources there on vc4a.com that you can use as well.
And we have time for one last question regarding, again, donor organizations. What's your opinion on the if donors should channel their financing for incubators and startups through local banks?
There might be a case where that makes sense. It wouldn't be my I wouldn't be my first thought. I think what you want to do is you want to try and keep the support direct and as uncomplicated as possible. And same for the hubs that are providing, some kind of support to an entrepreneur. we want to keep things basically as straightforward, direct as we can.
Thanks, Ben. A lot of questions, and you have covered all of them. I think we are running out of time. So thank you very much for your presentation. Some of the attendees are asking you on the chat to post your contact details so they can contact you. I think we will be in touch for future activities under BIC Africa. And thanks a lot again for being with us today.
Yes, thanks for having me. And hopefully it's a first conversation of more to come. So please also provide your feedback and let us know what you need more of, and then we can focus on that.
Again, I animate the audience to share with us the feedback, the questions on the email we shared before, and we will also contact Ben and the other speakers to send us the feedback received by the audience. Thanks a lot, Ben.
Great. Thanks a lot. Good luck.
Thanks.
Talk to you soon.
We have now with us Mark Rayner for the second session of today, linking with investors, funding startups, and the innovation community. Mark Rayner is a senior innovation specialist at St. John's University, St. John's Innovation Center, in the United Kingdom. He has international experience in high growth technology business. He funded successful corporate finance and venture capital funds in Europe. And Mark's career spans several sectors, including the Royal Air Force, SME lending, life science, corporate finance, venture investors, and as a business builder at a number of high growth companies globally. He was the founder, the CEO, and CCO for technology investment and environmental services business, having worked with clients such as Google, GoPro, Autodesk, Audi, Tesla, and Apple. Today we'll have Mark to share with us his experience to talk about linking with investors, funding startups, and the innovation community. Mark, thanks a lot for being with us and for sharing all your experience. We're looking forward to your presentation. So the floor is yours.
Okay, fine. Well, thank you, everybody. Let me just start my video, if that's okay. Mm-hmm. I'm just really honoured to be here today, and it's a fantastic opportunity to actually try to make sense of how investors and entrepreneurs come together and what they need to do. And I just, I've got such a passion. I've been doing this for 20 plus years and been into many different countries around the world. But today we're going to focus on pitching to investors for funding, which is the critical part that Ben had a fantastic presentation for VC for A. The big issue is how do you actually put your information together to get to those investors? So let me see if I can start sharing my screen with you.
Yes, we can see your screen now. Yep. Not on full screen.
I've got a weird screen going on at the moment. Apologies, everybody. Apologies for this. I've got two screens, so kind of it's kicking out of one screen. So apologies.
No problem.
Perfect. Right. Can you see that now? Good. Perfect. Excellent. Right. What can I say? St. John's Innovation Centre. We do this every single day, day in and day out, talking to entrepreneurs and to investors. The most important thing for us is to help to understand who St John's is. St John's Innovation Centre is in Cambridge, and it was it's a part of St John's College, which is in the University of Cambridge. We were the first European innovation hub, which we started in 1987. So next year is our 35th birthday. And some of you and your innovation centers are just starting this journey. So we probably have a little bit of understanding of where you are today. We support knowledge-based businesses in the UK that go on to become very, very large global names. We have Autonomy, we've got Darktrace, we've got many, many others. And not only does the center itself actually have tenants inside, we have over 500 companies that we look after in the UK at this time, ranging from agri-tech right the way through to biotech and everything in between. And investors by default have started to come to us, in around about the 5th or 6th year of our being, and see us as an extremely important place to come and look at new technologies, new entrepreneurs, and new processes that they might want to kind of invest in. Plus, we don't forget that we also will see corporate investors coming in as well. We tend to be an R&D center for those larger corporates that don't have an R&D center, which you will need to consider going forward. So what about me? Well, I started my career off as an air traffic controller in the Royal Air Force. I didn't put that on here because it's a bit of a distraction. What that allowed me to do is to actually think a little bit differently. And I applied myself in a number of high growth businesses when I was younger. And by the time I was 28 years old, I was running my own technology corporate finance boutique. And 2 years later, I actually wrote our first technology fund and wrote and ran 5 funds in Europe and North America, investing in university spinouts and taking some of those and more established companies to public corporations, i.e. onto the stock market. So what did we invest? We invested and raised in excess of 200 million pounds, 300 million US dollars, with an enterprise exit value of about $800 million. So my view here was, it was really interesting. We could take something that was a concept and actually it could become international, but it takes time. And the experience I bring along to my colleagues and Cambridge is that I've lived and worked globally, all around the world. And I think that if you only think of the world as one place, i.e. your country, it's not that. It's a massive opportunity. But as advisors, we need to make sure that we actually get global corporates to look and see how they can actually interact with our innovation centers. And today I coach and mentor the next generation of entrepreneurs. I end up looking after, with my colleagues, about 500 technology and innovative businesses per annum, and around about 1,500 entrepreneurs. And everyone has a different story and everyone has a different personality. So the biggest thing that entrepreneurs tend to have is that they tend to have this technology or an idea about what they're going to do in their marketplace, what service or solution they're going to bring. And the first thing I've always said as a venture capitalist and as a corporate financer is, hold on a second, do you know who your customers are? And Steve Jobs was a fantastic visionary. The founder of Apple, he always said, start with the customer experience and work backwards to the technology. Because if you start with the technology, you're going to have to figure out where you're going to sell it. Well, investors want to know what you're going to be able to do and how you're going to be able to create value for them and for the entrepreneur, their teams and their families. So the question is, why do you pitch to investors? Well, it's really quite simple. You're going to be doing a number of things. You're either going to be asking for their money or interest. It's a selling process, and you're persuading them to invest their time and energy into you. And it's an opportunity you're giving them to buy into your business and to have mutual success and a partnership. So they have to understand, and they work about, so why would they want to do it? And what value is it to them? And some investors will look at value as in value to the community, value to their own family, value to their own businesses, or value to the ecosystem. And think from the other side, they could be your customer. I see an awful lot of entrepreneurs that don't believe in corporate investment, or you may well have an investor that does something in retail and you've got a retail product. Well, they've got the shops, they've got the sales and marketing teams. Think about how they can actually help you to create a bigger team of people selling your solutions, products and services. You've got to convince them why they should invest in you. And this is a simple model that any advisor should take to heart and work on, irrespective of whether you're in an innovation center or whether you're just advising somebody to make them great. This pitch deck is around about 12 to 14 pages long. If somebody hasn't got a business plan, this is the best place to start. And each one of these modules can be broken down into one session for one entrepreneur. So the first one is, what is your company purpose? What are you doing? What's your product and services? Why you? The next thing is, as an investor will want to know, well, what is the current problem? And is it real? If it's about, more crops with your technology, or, the technology to make banking easier. Well, what is the problem? People getting access to cash, and you're providing a technology that gets them cash quickly. An example. Your solution has to be clear, concise, and it has to be sensible. And you have to explain to me as an investor, why? Why now? Why not tomorrow? Why not next year? So anything to deal with regulation, I love that type of business, because what actually happens is somebody has a need and they have to put that technology or solution or process into place. And it means that the people that are buying your product or services or solutions need your product today, because they have a government that's telling them to actually regulate. You've got to look at the market size. It's the addressable market size. I see many businesses turning around and say, oh God, we've got $100 billion, opportunity. And then you go back and you say, well, that's great, but you're not making $200,000 of revenue at the moment. How can you have $1 billion market? And where is it? It might not be, in your backyard. It may be in a different continent, or it may be in a different country. And so I'm looking, and any person looking for an entrepreneur is saying, how big is your current market? If it's a $1 million market and you're looking to take $100,000 of revenue out of that market, how are you going to do it today? And then what's the bigger picture when you grow? Competition. Again, something that people, I have read 10,000 business plans in my time, if I'm lucky. The biggest thing is that when I see somebody saying they have no competition, I don't believe them. Any technology, any product or any service will have a competition, whether that be direct competition or it's competition from regulation, governments. Classic example, we're living in the UK. We have just left the European Union. The competition for products from the UK into Europe has got massive, and more from government intervention than from, you know, kind of a French company trying to sell the same product in the European market. So we've got duties and everything else. You have to then address with the entrepreneur the product. What is the product? How does it get built? What is the service? How do you actually apply the service? What is your solution? You know, how fundamental is it? A really good question I tend to ask is, if someone has a piece of technology, I turn around and say, can you actually use other people's technology to grow faster instead of reinventing the wheel? Or a construction technology. And the one thing I say to the construction company who are bringing this new product, is there any manufacturing capability that currently is able, by tweaking their technology, to be your manufacturing plant of the future? So I personally don't have to think that you have to find $10 million to build your own manufacturing plant, but you could do a corporate partnership with a manufacturer that actually wants to get the next generation of your construction material. The business model, again, I talk about the business model. The business model is very, very simple. It's how much are you going to sell your product, service, or solution for? Is it going to be physical? Is it going to be licensed? And anywhere in between. So I actually want to find that if someone says that my product is $10 a unit, I actually want to understand who's buying that, how are they buying it, and why are they buying it. The team is the next one. Just think, if you're in plastics manufacturing, for instance, and you have a team of financial experts, how many plastics experts are there? And the answer is 0. That it's a dream team that are dreaming, not the dream team to land the value. Team are really, really important. It could be because they've gone to university, they're a scientist. It could well be that they're an entrepreneur and they're in retail and now, you know, and they've had some success. And that's really, really important. And then you go back. And then you go back to financials. What are the financials, and do they make sense? Is it realistic? What is the cash flow implications? How much money do you need? When is the payback? So really, that's a very, very in-depth thing that entrepreneurs aren't very good at. And when they go to an investor, what is the ask? Is it, can I just have some money? Can I have some money and contacts? Can we have a partnership? Can you distribute my products, services, or solutions for me? It's a whole range. So, and you know, what are you going to, if you're asking for $10,000, then how are you going to split that 10,000 up? Is it $2,000 for sales and marketing? Is it, you know, kind of 3,000 for operations and logistics? And think very, very, very hard about, you know, kind of why. If someone comes to me and asks me for money and they haven't got this right, or it doesn't make sense, and someone says, I need 10,000 for more technology, and they haven't made a red cent, I probably wouldn't invest in them. And the last part is the exit. And a lot of entrepreneurs say to me, Mark, you know, the important thing here is that I want the money so I can actually grow my business. I want my investor in, but I actually want this business to last 30 years. Therefore, I still want to be involved in the business in 30 years. But the investor might not want to be there for 30 years. And the investor, you have to make sure that you understand each other when the investor comes in. The investor may say, I'll give you the money. I would like a return in 5 years' time. And I'd like a return at you know, 5 times above what I put into this business. And that may be just a simple, okay, let's do the 5 times above business. we'll work hard, we'll be successful. The cash that comes into the business will pay our investor back, and I still hold the company in 20 to 30 years. You may turn around and say, well, it's $1 billion company. I now want to sell the whole business and use that money to reinvest back into my community and into my family and to build my community stronger. So again, as advisors, just think about how you could approach the entrepreneur and say, what do you really want? What do you really want to do with your company? Do you want to be there in 5 years' time? Do you want to be there in 20 years' time? So a really, really thoughtful process. And none of this, the 12 steps are the important steps. What you put in there and what the entrepreneur puts in there is their creativity and what they perceive. And it's my job to sense check to make sure that they have the opportunities to try to land the cash requirements. Very, very simple questions. I'll leave this on the slide. You know, as an advisor, take it away. You should be, kind of going very much into these open questions. There are only a few of them. Who are you? And don't think about who is the company, but who are you as the entrepreneur? What do you want? So think about these really, really interesting leading questions that will help you define what their pitch deck or what the entrepreneur's pitch deck will be. So why are investors important? Well, Ben had a fantastic opportunity to explain investment, and I've seen every type of investment, and it could investors. There's only one thing to say, and I've got a statement here that actually says it. And this was from an investor. This investor told me one day that he had the money and the company that I was working with had the ambition. And without the funding from them, only dreams are achieved. But with funding from them and hard work of the entrepreneurs, the dreams that the entrepreneurs have can be realized. A really strong statement. So I'm going to probably cover a few things that Ben did in the last session, but these are quite interesting and something that you might want to think about. The investor ecosystem isn't just me and the investor, the entrepreneur and the investor. I will always be surprised that sometimes I talk to an investor that doesn't want to invest in the company that we're talking about, but they know in their network who would be interested in the solution and who may be an investor. So don't think that when you approach an investor that they're not connected, and be professional. If an investor doesn't like you, or they believe that you're less than reputable in their eyes, their network will, that your professionalism and your character will be telegraphed to other investors in the community quite fast, because investors speak to each other always. I've spent 20 years talking to other investors. I only had one very small pot of money, and if I liked something and I couldn't invest at the time, have a guess what? I'll be speaking to 3 or 4 other investor groups saying, you need to look at this, this is cool. So whilst they may not invest together, I had a duty of care as a venture capitalist to pass on great opportunities to my colleagues in different funds. So what mistakes are commonly made? Well, there are so many car crashes out there that I never allow an entrepreneur to pitch to an investor until they've actually gone through training. It solves so many issues and it picks out so many inconsistencies that the companies don't actually know they're talking about. They make clear statements. It's all about the idea. What idea? You know, kind of where's your customers? You talk about the products and services. Classic, I have a pen. This pen is great. It's a pen. The benefits of the pen is that I can write the check with this pen. That's why this pen's really important, because there is a benefit. I honestly listen to too much technology or product or service or solutions that go in depth about, you know, kind of the programming that they used or the how to bend a piece of metal. What are the benefits? They don't focus on the team. And I'm betting on the team. The team are the most important point of their pitch. An entrepreneur who is fully vested in their product will actually turn around and go, you know, this is a brilliant product. You should buy because you're going to be, you know, fantastic and blah, 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 blah. So what? I have so many entrepreneurs which I actually classify as evangelists. If you think that your product is as good as you think it is, and you can't carry the investor or the partner with you to understand why there is a benefit for them, then quite honestly, they should go back and rethink their business plan. Because if there is no synergy and they haven't done their homework with the investor will switch off very, very quickly. You probably get less than a 5-minute discussion with the investor. They also don't consider the investors buyers and partners. It's, you know, how many entrepreneurs have come up, and some of them say, look, once I've got $1 million, you know, I can go and do whatever I want to do, and the investors will sit at the side and whatever. Well, most investors actually put a legal document to you, a shareholder agreement, that, as Ben said earlier, actually puts you under pressure to, one, deliver, and two, if you actually have kind of decided that you're going to be different and you're not going to look after the investor could actually ask you to leave your own business. So that's a big, big mistake. And I've had a lot of entrepreneurs that have failed and left their founding jobs because they didn't understand how to deal with investors and partners. And one of the worst things that you can do is financial errors in your financial forecasts. It's really, really, really not on. Never give anybody numbers that have errors in. Harvard Business Review say that a business plan or a pitch deck, let's call it this pitch deck at this moment in time, is read from cover to cover, 14 to 16 slides in 3 minutes, 45 seconds. The two biggest areas where they'll spend dwell time on will be team and financials. Everything else drops in afterwards. So think that probably 2/3 of the time is looking at the team and the financials. That's a big time. And if you don't get that right, you know, kind of, I've thrown business plans away because I've looked at the financials, they didn't make sense and they had loads of errors. So therefore, if I look at errors in financials, I think that the management team don't have the precision that I need them to have in other areas of their business. So here are the lists. You know, it's kind of, again, Ben put this list up. Lack of skills in the management team. Let me come back and say, lack of skills in the management team. What do you do? When you go to an investor, you say, we are a team of X, and we know that we need to get a sales and marketing and an operations person in, and this money will help us to actually bring those positions in. That's mitigating, not credible financial projections. I've got something that's going to make 100,000 in revenue, and in 3 years' time, it's going to make 100 million. Does that sound credible to you? If I'd rather them say it's going to be 10 million, And if you do reach 100 million, fantastic. There's no track record or proof of concept. I deal with early stage businesses, and I've taken IPR, intellectual property, out of universities. And the interesting thing about that is that there is no proof of concept at that time, and there is no track record of the technology or the product or service. But what I see is the opportunity as the venture capitalist to see that there is a bigger market, and that I can use my network to actually get that technology into proof of concept stage, and I'm buying at a fairly cheaper price. Inadequate financial returns for investors is always going to be a tough one. You know, some people might want 20% return per annum. Somebody might want 10 times their money back. It's all going to be on time and what they believe is value. Too complex. I had a pitch from a quantum physicist 2 weeks ago, and halfway through I wanted to fall asleep because I didn't understand the complexity of the technology, because they haven't actually put it into layman's terms. Most investors aren't quantum physicists. When things aren't scalable, and I'll redress that. They can be scalable in your community and they could be funded. But if it means that one entrepreneur can't scale to a sizable value for their community or in their country, then that's a no-no. Lack of trust, and that's speaking to the CEO. Who is the founder and who is the CEO of the business? You know, when can you look them in the eyes, and can you have a cup of coffee or a cup of tea with them and have some common ground and feel like there's a trusted relationship? If you walk into a room and you feel that somebody is slightly different, you've already made your decision that you won't invest. So again, it's all about body language. It's not about what you say, about your body language, about you, about your confidence, and about the way that you actually put yourself across. And that's body language, but it's also about the way you dress, and it's loads of different factors. Lack of market awareness. That comes back to competition. We all know that some technologies and solutions become obsolete over time, and it's just the natural world, and it's evolution. And people with no market awareness or a lack of market awareness may think that they have a product that will last 10 or 15 years, or they don't have a roadmap. They just have one product that they think will last 10 or 15 years. And I look at that as to say it's high risk. Where is the roadmap to evolution? No clear exit route. Again, it comes back. Ben was talking about, kind of getting money back to the investors. They want an exit. If you turn around and say, look, I've got a $10 million business, or I've got a $1 million business, or a $100,000 business, and I can pay your money back in 5 years to the investors, and give you, your 50,000 is now 250,000. That's an exit route for the investor. Think of that. And don't just think that you have to sell your company and kind of the investor goes off. The entrepreneur, the person standing in front of me, the biggest selling job that they have is selling their idea, concept, product, services, or solutions to me as an investor. Think of me as a buyer, and I am buying until you can't sell. Simple. And lastly is there's no interest in the investor. They're just being polite to you. If it's a petrochemical business that, that they own and they have loads of money, and you come along with, a service to do banking, well, it's not in their area of interest. But the one thing about this is that the question is it may not be of interest to you, but in your network, who may it be of interest to? And these are the selling bits that we pitch and help those entrepreneurs with. It's about moving a conversation on. So, getting it right. There is no lack of ability on any entrepreneur. There is a fundamental right for them to actually be successful, for their families and their communities to be successful. If they want to be successful, they need us. They need to be professionally trained to pitch for investment, and that pitch could be their business plan. It gives them a greater opportunity to receive funding because somebody understands that they've taken the time to articulate this information. And this pitch deck really helps teams to clarify who they are and what their focus is. You'd be surprised that many companies talk a lot about their technology, about what they're going to do to change the world, but they don't have a focus. A classic, one of this, I had a client, he was doing a voice, Alexa voice program, which, picked up people talking, and he was going to sell his solution to Google. And he didn't have a proof of concept or minimum viable product. And we refocused him to use his technology for visually impaired people to make their lives easier. We didn't talk about Google, but he got 5 partners who wanted to sign up and some corporate responsibility. Some corporates actually wanted to fund his project because he was doing good. His idea of actually selling to Google minimized, and now he's running a very successful business helping visually impaired people that he never thought of. The pitch deck also can be used for many different funding situations. It can be used as a tongue-in-cheek to the bank manager, to the investor, to a credit agency, to groups, to a corporate partner. Because this pitch provides clarity, it delivers increased focus, and it builds the confidence of the entrepreneur to sell. And above all, it challenges their teams to actually think about what they're really doing and where they're going. And it provides a greater chance of success for the team and everybody in their ecosystem. "33 minutes, it's not bad. I will take questions if anybody has a question.
We have a few, Mark. Thanks a lot for your presentation. We have some questions. One of them is, normally, what is the range of years that an investor would like to exit, and what an average multiples of the investment they look for?
Okay, it varies on size of business and maturity of the investor. I would say that investors are, I would say 3 to 7 years. Mainly angels like a 3 to 4 year program because they're probably ready to retire or they just want to do more investing. If they can get the money out faster with a higher return, that's great. The returns are really interesting because from a venture capital perspective, it is, I would say that your average return year on year is around about 28% per annum. From an angel investor, they're looking for 3 to 5 times their money. Mm-hmm. So, and anything in between. And you get lucky on one, maybe out of 10. And if you do, fantastic. It could make the whole of your fund happy.
Great. Thanks, Mark. And in your experience, what excites an investor more? The existing market of the product or service, or the potentiality to create a market in the future?
I think it could be a combination of both. I think what actually happens is investors. I invested because so I'd invest in medtech, and my view was that in 30 years' time, I'd like the technology that I've invested in to be accessible to everybody, and for that technology to help people. So I had a bit of an impact investing brain. But I also invested in companies where I could see an evolutionary change, where people are lagging behind. And that evolutionary change is good, because what actually happens is, think of yourself as an entrepreneur as the research and development arm of a corporation that doesn't actually know who you are at that time. And if you get big enough early, they are your acquirers. So it's a real mix.
Understood perfectly. And how can we deal when the industry doesn't have formal information about the market, which is the case, for example, of Angola? How to make a strong business plan in these type of situations? Yeah,
the internet's a wonderful thing. We have to base our thoughts about what the world market is, and then go back to country. And then it's market research, kind of how many entrepreneurs do I say, have you ever picked up the telephone to somebody that might be in this sector and had a chat with them over coffee to talk about how effective is this? What about this general idea? What do you think about it? And what is the market like in my country? And lots of people are scared to pick up the telephone or to have that coffee with somebody. But they're your reference points, because you can say, kind of John at this company, or, an employee at this company, a senior exec, said that the market for rubber plantations is going up to 100 million this year. And that your technical process is able to compete or evolve the extraction of that substance. And all of a sudden, you've got somebody who's given you a credible statement that you can actually show investors that there is a route to somebody who's actually in the marketplace.
Thanks, Mark. A different question. There are many reasons investors walk away from the deal table during fundraising discussions. What are the reasons that can make an entrepreneur walk away from the investors?
That's a really good one. That's when an entrepreneur feels as though the investor has the upper hand and doesn't have their interests at heart. I've actually I've got 4 of my own companies of being an entrepreneur. I've actually walked away from investors when I felt that they wanted too much of the company, that I wasn't ready for them, and I didn't feel as though that they had the right background that would actually help me. They were just money people who wanted to be in something cool. And not actually work on my behalf to make their investment better.
Quite interesting. And when you started, Mark, what did you do to invite the first investors and to make them trust your institution or your startup?
Really, it's about confidence. First of all, what I would do is you build your network, and your network introduces you. It's more of a mature market in Europe, whereby most venture capitalists and private equity people won't speak to you unless you're known or your organization is known. So St. John's, we've been going for 35 years. I pick up the telephone. It was only yesterday I picked up a telephone to a venture capitalist, and they're looking in just one telephone conversation at looking at putting 15 million pounds into a manufacturing business, on the basis of I know what I'm talking about, and I have the contacts, and I've been clear about the process. Had it have been the company go to the VC, they would have actually gone, well, can you send me something? So it's about relationships and networks, and you only get that by credibility and having done something.
Great.
So find a friend.
and this is always good. This is always an essential option. Do you have any advice for a good business plan in the civil construction sector? How to do a pitch in this sector? Any specific, specificity for this sector, this type of industrial or construction sectors?
To be quite honest with you, those 12 steps that we've been through are the 12 steps you follow, irrespective of what industry you're in. Follow the 12 steps, and you will be able to shake out all of the questions that you have, whether it be civil engineering, whether it be manufacturing, whether it be a solutions. I don't teach. I teach those 12 steps. I don't teach anything else because the reason is many in the mid-90s, 2000s, 2010s, everybody was starting to try to get too smart about their pitch. As an investor, I would be absolutely not, if I don't have a standard format, the things that I would actually ask an entrepreneur sitting in front of me, I'd throw it in the bin. I wouldn't actually, I'd read the first page and go, I just don't, it's not answering any of my questions, I'm off. The first 2 pages of any pitch deck, problem and solution, are the most important for me because I only have a minute to read them. And so I wouldn't be so specific about anything at all. Follow the rule of 12.
And Mark, what about, well, you have seen thousands of pitches, and what about the technology, the figures on sales, the team? What is the importance, for example, of you pay to these specific areas, especially the team?
Yeah, I would, it's this, what is the problem? What is their solution? And who is going to effectively build the solution and capture the market? And those 3 things are kind of most important for me. The team itself, my first impressions is the pitch deck is great. Now I need to look at the CEO of the business or the person presenting. And I do an ultimate amount of checks. It's like a Formula 1 driver going around at 250 miles an hour. I'm looking at things that you don't even think about. I'm looking at someone's shoes. I'm looking at the way they present, their body language, their intonation. So, and I'm not just looking at the business. I'm looking at, can I work, if I invest in this person, could I work with this person? What is my gut feel about working with this person? And just to let you know, I made one mistake, and I was signing up a $4 million deal, and just before I was to sign the piece of paper, the CEO let himself go in his proper personality. I walked away from the deal. At the time, it was literally the forms were in front of me to sign the check over, and I walked away. That's how you don't, as an entrepreneur, don't think that you actually have your money until it's in the bank, because if you anybody in their right mind will walk away if there is and that will be 1 minute before the deal's signed. And I didn't mind spending $50,000 on the legal fees because I knew I'd save 3.95 million on making a bad deal.
Again, everything is about, or almost everything is about trust and being confident.
Absolutely.
In the other.
And you can only trust somebody so far, and the entrepreneur can only trust somebody so far. Think of it as the marriage to the honeymoon. And then the reality of life as a married couple.
And that's a nice approach to see the investment and this journey together, of course.
Absolutely.
Of course. And in your experience as an investor, how have you handled mistrust issues post-investment?
It's about an education on both sides. So an education from the entrepreneur side. My view is this, and it may kind of resonate. When someone says it's you, and you look at my fingers, it's the person pointing one finger and three fingers are pointing back. So then if they're pointing the finger saying it's you, then it must be something to do with me too. So it's about actually understanding the language, the cultural difference, the value or the frustrations. And my point is, I usually take that entrepreneur away for a few hours, away from their environment, away from my environment, whether it's going for dinner, having a real discussion, having a one-to-one, not being embarrassed in front of your colleagues, and working through why. And then it's a marker for both the entrepreneur and the investor about how can they work better together. And when it doesn't work for the longer period of time, that's when you have to make management changes. But if you make management changes without going through that process, you're a bad investor and you're also a bad entrepreneur.
Excellent, excellent. And there's someone highlighting the importance for entrepreneurs to do some research on investor profile as well, as it can make a difference. So not only the investor doing research on entrepreneurs, but also the opposite side.
Yeah, and I think you're absolutely right. I think the analogy is this: you don't want to get into bed with the wrong investor, but at the same time, be aware of what you're getting into, because there aren't investors on every tree. If it means that it's a limited source of supply to your investment and it will actually help you, then be aware of your responsibilities and the way you can actually create or reduce conflict, and how to reduce conflict. And I was talking to this venture capitalist yesterday, and they said we reduce conflict by actually having somebody as a non-exec director that understands about investing and actually can be the champion between the entrepreneur and the investor. So you could actually get that person in the middle of you to help you to take the money, but also defend you against an investor who might later on become difficult.
Great. We have more questions. Is traction a requirement for you to invest in a startup, Mark?
It all depends. It all depends how great it is. Typically, biotechnology, life sciences companies don't have any traction. They have microbes and an opportunity to save the world, to save the world, to reduce cancer or something. You'll invest in them before you'll actually see any traction. I've invested in very, very early stage businesses. There aren't that many investors that do that. They like to know that somebody's had a proof of concept or an MVP, or their letters of intent with potential partners. The riskier the investment is, the more the investor will ask of your company in terms of equitable holding. So they could find themselves with a 50-50 holding or even more.
Okay, more questions. In Ethiopia context, most of investors are not interested to work dairy farming and milk production, but entrepreneurs have experience and are interested to start this business. How to balance this business idea for creating a win-win approach? Any idea?
Yeah. Again, it picks up on a little bit of what Ben said earlier, but the hub approach of bringing those farmers in and education is really, really important. If you have an idea or a strategy, then it's about educating the farmers, for instance, and then working with them. And think of it as a partnership where mutual benefit of value sits. Because once you have one or two producers that are in a cooperative and they see the value i.e. they're getting more money for what they're doing by implementing your services, you could actually get them to be your peacemakers to everybody else. And then it becomes a capillary action, and they start to speak on your behalf about something that's a traditional business that other people will want to be part of because it makes their families more comfortable.
Great, thanks, Mark. How to best pitch an entity that is loss-making but holds a lot of potential?
Again, if you're an entrepreneur and you're loss-making, you're asking for money to release that potential, aren't you? The loss-making is, I'm loss-making, but I have so things like letters of intent, partnership agreements, kind of somewhere where somebody's saying, oh my God, you're going to go from $100,000 to $300,000. You're going to break even and you're going to become profitable in the next 12 months. And you've got letters of intent or contracts subject to you getting your funding. That's great, isn't it? That's kind of like saying, okay, fine, I've got customers.
Yeah, I'm losing money now, but in the future, it's
assured
that I will be.
Yeah, absolutely. Money. Yeah, so it becomes less risk, more tangible. When you start a business, it's pretty intangible, i.e. that you don't know whether you're going to ever make any money. Then when you start making money but make losses, you're at the first part of that journey to make revenue and profit.
Yeah, it's clear. Have you done any international distribution deals, and what should one look out for? This type of deals?
I have done many. Distribution deals really interest me quite a bit for the simple reason is people think that they have a distributor who is in a different country to them, and they forget to say, well, kind of how long is the distribution agreement going to be? What are your responsibilities, and what a level of revenues will you sign up for? Before and I've seen loads of companies that have gone, okay, look, I'm in 5 different countries, I've got 5 different distributors, and they haven't even got so you're selling 5 units for me this year, and what's your business plan? So it's like, are you the right distributor? Can you sell them? Have you got effectively, how many can you sell? And can we keep that as an item that if you don't sell them on a quarterly basis, I'm going to look at you and we can terminate our distribution agreement. I had one distribution agreement in China, for instance, whereby before I got into the company, someone forgot to actually ask those questions and put units and numbers in. What actually happened is they couldn't enter the markets with another distributor for 3 years because they'd made a really bad choice about the distributor and they hadn't held them to account for the things that they said they were going to sell. So it has to be a get out clause for you. Otherwise you end up kind of, you might be kissing the wrong frogs on this occasion.
Yeah, important, clear. And last question for Mark, should an entrepreneur consider money as the main factor in deciding which investor to go for? It's only money.
I disagree with that. Yeah, if you're only in for money, then good luck to you. Because that you're going to pick your wrong investor. It's about value is calculated by what the investor can give you in addition to in addition to money.
Not only in terms of money. And this could be contacts. This could be advice.
It could. Yeah, just think they run, let's say they run amazing warehouse distribution. You need warehouse distribution. They're going to turn around and say, Mark, you've got 1,000 square meters in every distribution and you don't have to do anything for the next 12 months. Let's just give it to you for free. Let's see how it goes. Well, have a guess what? That's free money.
Yeah, absolutely.
So, those kind of things. Yeah. Think about what you think you can get. You might get a whole 100 people on a sales team selling your product 5% of their time, but at least you've got 100 salespeople that you're not paying for, because the investor's vested.
Yeah. Clear. It's clear. Well, Mark, I think we have made a lot of questions to you. Your presentation raised a lot of interest from the audience. For me personally, has been also very insightful. I've learned a lot. So I thank you very much for being with us, for sharing this experience and this knowledge with us and with the audience. And hopefully we will meet again for the BIC Africa project, and together with this representative of business support organizations, universities, chambers of commerce, and entrepreneurs in Africa. Thanks a lot for your time.
Yeah, it'd be fantastic to see everybody in Cambridge at some point. So you're invited for the coffees.
Great. We will take this invitation, and hopefully once we will be able to travel, we can meet there. Of course.
Absolutely. Well, thank you everybody for your time.
Thank you very much, Mark. Thanks a lot. And
Ruben, before you wrap up, Ruben, sorry for interrupting. Just going to. There was one question actually about whether the training would be possibly permitted in Ethiopia, and also addressing entrepreneurs. So I just wanted to explain, perhaps again for those who weren't with us yesterday, that the BIC Africa project is formed of two components. And one component is 4 separate country projects, which haven't actually started yet. That will be working with local partners, and there will be indeed a lot of training activities, events, networking opportunities, especially between the incubators in Africa and client companies. And these projects will start probably in September, October of this year. And again, our project, BIC Africa, as you're aware, is more about bringing the European connectivity. And we're so pleased to have people like Mark join us for this initiative. And we have, as we said yesterday, EBN, about 500 experts, similar to Mark, all across Europe, all working in incubators. And the idea is to exchange with you over the 4 years of the project, some opportunities, trainings, and indeed, as Mark mentioned, come to Cambridge, and indeed there will be activities focused in Europe where we can invite some incubators to come and exchange with us in Europe. So just to remind you that there will be a lot of focus, more tailored, bespoke training in Ethiopia, Angola, Madagascar, and Somalia. And our role is especially to bring the connectivity to Europe. And again, as we said yesterday, trying to look at the opportunities as well for business, and why not finance between Africa and Europe. Sorry, Ruben, to interrupt. I just wanted to make that point as it was addressed in the chat. Thank you.
No, thanks, Robert. And also remind all the attendees, since we are receiving a lot of questions, about if we will share the presentations and the recordings of the sessions. We will, of course, share the presentations with the audience. You will receive them in your email in the coming days, and we will also share the recordings. Just a brief last reminder of the session tomorrow. We will meet tomorrow at the same time, same place for having the last session of the training. We will focus tomorrow on how to develop a vibrant ecosystem, how to engage with the different stakeholders of the regional ecosystem, including corporates, including angel investors, including public administrations, to help business incubators to organize, to implement successful programs to support client companies. And then we will have this conversation, this discussion with different representatives of business incubators, answering to your questions on how to manage an incubator, the problems and the challenges you face in the day-to-day activity. So please send us your questions to the email address you can see on the slide. and we will be happy to discuss about this tomorrow. That's all from our side. So thanks again for being here today, and see you tomorrow, same time, same hour, same place. Have a nice day.